And our next guest says that when central bankers start to warn about the risks of a global economic slowdown, we should sit up and take note. Sarah Hewin joins us now. She's a senior economist in charge of global research at Standard Chartered. Sarah, what do you find worrying about the situation right now?
Well, there are any number of factors. Of course, we've got the euro area crisis still to be resolved, and that's in a context of signs of a slowdown in the euro area. We have weak growth in other Western economies and some signs that momentum is fading in emerging economies as well. Added on to that, we have banking sector strains and financial market stresses in general, which are sort of reminiscent of the 2008 period.
All right. So you put all those things together, some big risks facing the global economy right now. Are conditions bad enough to get some coordinated action on the ground? This is the pledge the G20 is making, but what are we didn't get anything concrete?
Well, I'd be interested to see what emerges from these meetings, because it's not clear really what can be done at the current juncture. Back in 2008, governments embarked on fiscal spending as a means to really mitigate the worst impacts of recession. But of course, governments are just not in a position to do that now. Part of the problem is that we're seeing fiscal tightening, and that's exacerbating the slowdown. On the banking side, I think the calls for further recapitalisation are significant. It may be that we see government support for the banking sector picking up, and that would be a positive move. But beyond that, it's difficult to know what can be done, apart from pressing the euro area governments to ratify the improved EFSF.
What about the prospect of a coordinated policy or some sort of action in terms of fiscal stimulus? Is that something that we're likely to get?
It's very, very difficult to see that happening at the moment, because governments have large deficits, they have rising levels of debt, and the sort of political support, and indeed perhaps the market support for a further stimulus is just not there. Now, you can argue that with US Treasury yields and with Bund yields at close to record lows, now's the time for those governments to embark on further borrowing. But the political situation both in the US and in Germany really opposes that.
And you mentioned the banks, and of course we've had this push, if you like, during the course of the meeting for European policymakers to do more to recapitalise the banks. What sort of mechanism could we be moving towards? Because already the ratification of the EFSF has been fairly slow. I think that's fair to say. You have just 6 nations that have whose parliaments have ratified this agreement. Could this delay actually provide some sort of opportunity to expand its remit very quickly?
I think it's very difficult to see the EFSF remit being expanded from the current period. It's the next step has to be ratification by all member states, all 17 euro area states, and that in itself is quite a hurdle. Once it's done, it does improve the tools at for use of the EFSF. So it does have a positive advantage if we can get that ratification. But in terms of expanding the size of the bailout facility beyond what's already been agreed, I really can't see that happening until or unless the euro area is in a really, really difficult situation.
Right, Sarah Hewin, global economist in charge of global research at Standard Chartered. Thanks very much for really putting that into context for us, the challenges facing the G20, IMF and World Bank as that meeting in Washington continues.